Good afternoon. This is Mike Abernathy with Buckeye State Credit Union. And yes, we're here to talk about your credit again. And today we're going to talk about accumulation of debt. So what goes into accumulation of debt? Well, first of all, it comprises up to 10% of your credit score. But secondly, we're looking at two pieces here. We're going to be looking at the inquiries, so the credit pulls, and we're going to be looking at new trade lines, the actual new loans you get. So let's start with inquiries. So we've all seen the credit reporting commercial. They're going house shopping or apartment shopping. The young lady is going to be hitting the button, and we go into slow motion. The pancakes hit the floor. The guy gets down on his knees and is like, my goodness, my credit is ruined. And then the realization is, no, my credit's not ruined. The credit's not affected by checking at that website. That's correct. You can go to these different websites and self-check. If you're self-checking, it's not going to impact your credit. Other things that will not affect your credit, so if you look at getting new insurance, so maybe you got to get renter's insurance, homeowner's insurance, auto insurance, there's a good chance that the insurance company is going to pull your credit. They do generally what's called a soft pull and will not be reported to your credit report in general. Other areas would be a pre-employment background check. So if you switch jobs, a lot of companies, as part of their background check procedure, includes reviewing your credit report. So those are not going to impact your score. So let's talk about what will impact your score. A creditor, a bank, a credit provider, going out to buy a new car, get a new credit card, that mortgage loan, a personal loan. When the bank, credit union, or finance company pulls your credit, it is going to have an impact on your score. But don't panic. It is not some massive, holy smokes, I'm losing 25 to 50 points on my score. You're approximately going to lose 5 points. So if you're a 750, you may temporarily reduce to a 745, but you can rebound pretty quickly from there. Other areas where people really get nervous is I'm going car shopping. I'm sitting in that office with a finance manager, and he has hit the button and he has shot my information out to every bank and credit union in the area. This is okay, because that is going to be coming up on your credit report as something called a like inquiry. So the credit report picks up on, okay, this person's at a car dealership. So they're shopping to buy a new car, and so it has adapted, and they recognize we're not going to just hammer this person's credit score because they're trying to find the best deal. So again, don't panic. You might be looking at a count. My count is 1 altogether. So instead of having 12 banks hitting you for 5 apiece, it's going to count as 1 pull at that point. That's the general rule of thumb. So again, as long as we're not going out and doing a bunch of shopping for credit and every month having our credit pulled, you're going to see minimum impact, and those are generally impacts that can recover pretty quickly. They're really looking, the credit report is generally looking at a 12-month history. At the bottom of your report, you're going to find a listing of all the credit pulls that have been done in the last 24 months, but your score is primarily and in general reflective of 12 months. So we've done the inquiries, okay? We understand how it impacts my score. So 5 points per, and if I go to the dealership and 12 people pull my credit, it's just going to count as 1 pull. So now let's talk about new trade lines. We got the car, we got the house, we got the new credit card. How is this viewed? So you're not going to see a major reflection within your credit score based on the new trade line. But if you go back to our past videos, you're going to immediately understand that there's going to be length of credit impacts, there's going to be capacity impacts. So if you're low capacity right now, and say you get a new $5,000 or $10,000 credit card, that's going to help the capacity and help push it up. But if you have a lot of credit that's very new and it's not aged out, or you only have maybe 1 card or piece of credit that's aged out, this is going to pull that average down. So you're going to lose a little bit when it comes to your length of credit history. So that's really where the new trade lines are going to impact you the most. So overall, short video today, but it is something that we get a lot of questions about. You know, how does a credit pull impact me? How does getting a new loan impact me? And just to recap, you know, don't worry about those dealers who are sending it out to 12, 15 different banks and credit unions. It is in general going to count as one pull, and one pull is generally going to count as 5 points. So we're not going to see the massive reduction in credit score. So hang in there, go get that car. Don't worry about it. So with that, again, this is Mike Abernathy with Buckeye State Credit Union. Thanks for watching. We'll see you next time.